Hello, hello. Good. It's working now. Okay, I hope you guys can hear me now, right? Can you guys hear me now? I'm sure it's clear. All right, good. I was supposed to select I was supposed to select the sound as part of it, but I didn't do it. I didn't do the sound settings. That's why it was you guys weren't hearing me. But it's working now. So um good afternoon to everyone. I hope we are all doing well. So we don't really have much time. Let's go right into the market and find out what we have ahead of us this week. But before then, let's first check fundamentals. Okay. So I'm going to share Forest Factory, and I'm sure we have FOMC, um, NFP, and things this week. I hope you guys can see the screen and can hear me clearly. Can you see the screen? Can you hear me? Guys, comment now. All right, good. Okay, so looking at the market this week, um, tomorrow, tomorrow we have final manufacturing PMI at 1:45 Ghana time, and we are expecting neutral news. ISM manufacturing PMI at 2 o'clock. We are expecting positive news. ISM manufacturing prices, we are expecting negative news. So ISM manufacturing PMI manufacturing prices, it's all at 2 p.m. One is negative, one is positive. So when it comes out like that, then we should expect a top and down move, like up and down move. Okay, the market will go up or come down before it will go to its original direction. On Tuesday we have 2 o'clock Ghana time. Jobs job openings at 2 p.m. and we are expecting negative news. Previous was 4.9, 8.49. We are expecting 8.40, which is negative. On Wednesday, 12:30. At 12:15, ADP non-farm employment change, and we are expecting negative news. At 1:45, final service PMI, we are expecting neutral news. 2 p.m. ISM service PMI, we are expecting positive news. All right, that's on. Oh, sorry. So this is on Wednesday actually. On Tuesday we have just one news, that's the job openings. And Wednesday, okay, yeah. So I'm on Wednesday actually. So I'm not lost yet. So on Wednesday we have that news, service PMI and ADP non-farm employment change. That's the news we have. On Thursday we have unemployment claims at 12:30, and we are expecting positive news at, yeah. So on Thursday we have only one news, which is unemployment claims. Then Friday we have NFP. Yeah, we have NFP on Friday. And average hourly earnings, we are expecting positive news. Non-farm employment change, we are expecting positive news. Unemployment rate, we are expecting neutral news. So NFP, we are expecting positive NFP, which means gold drops. All right. So those are the fundamentals we have ahead of us this week. So if everything is clear, then let me share another screen. Let's go right into the chat and look at what is happening to gold. All right. Yeah, so if you look at gold, let me clear the chat. And first of all, monthly time frame, because we are in the beginning of a new month, a month of June. And as you can see, from February, March, April, May, the market has actually been good to us. Everybody can testify to that, right? Yeah. So looking at the markets on monthly time frame, you can see that last month, that was okay. Let me take you to 2 months ago. In April, gold created all-time high to 2430, and in May, oh, Sammy, is clear. The screen is clear. I'm sharing the screen. I see it here. Do you know something? When you share the screen, it takes some time. It takes like 30 seconds before it shows. And you see, I think the thing lags. It lags behind somehow. That's why you guys were not seeing, but it's clear now. All right. Okay. So let's go back to business. So if you look at the monthly time frame, you can see that April created all-time high, May created all-time high, but something is happening. If you look at April, you can see that April went all the way to 2430 and dropped, closing at 2289. Now, May candle also went all the way to 2458 and came to close at 2327. What is happening? Does it tell you something? If you look at it very well, it is clear that there are a lot of pressure at the 24 zones. Okay, the 2024, yeah, the 2024 zone, there is a lot of pressure. 2400 zone, there are a lot of selling pressure right there, which also always try to reject the market. So, but it also closed bullish, right? It still closed bullish. And looking at how it closed, this is an inverse hammer, right? An inverse hammer to tell you that the market drops. But since there is no resistance, okay, because if you look at gold, this is all-time high. So you cannot conclude that looking at monthly time frame, gold is selling. No, you cannot conclude because there is no resistance level which you can use to base your emphasis on that due to this resistance the market is respecting, so it's going to drop. There is nothing like that. All right. So we only use psychological levels to trade according to monthly time frame. So looking at monthly time frame, something like this can happen. Okay. Something like this can happen whereby we are going to see something like this. Okay. Something like this can happen, but I'm not saying it's going to happen. It can. Like the market can just drop all the way like this to 20 low 20 zones according to monthly based on the two rejections right here. Something like this can happen, or it can also go all up and then reject, creating a wick there and for it to sell. So this month I don't really know why, but I'm expecting a sell. I don't know if there's my intuitions is telling me the market is going to drop or something. I have no idea, but that is what I'm expecting though, based on how the wicks have been formed. 2 solid months, gold went all the way up and still got rejected, meaning there is a selling pressure, so there can be a push to the downside like this. Okay, but whatever be the case, we will be here and watch to the end and see what is going to happen. So let's get right into weekly time frame. Now, if you look at weekly time frame, something is happening on weekly. Now on weekly, we have a zone right here. We have a zone right here. And now we have another one here. Right. And if you look at, you can see that the second zone has been broken with bearish engulfing. Nice one. A nice bearish engulfing, right? Bearish engulfing indicating a sell. And if you look at last week's candle, you can see that last week struggled, but it couldn't go anywhere, even though it closed bearish, indicating more selling pressure. Okay. So this week actually, I'm expecting the candle will open, go a little somewhere 23.44, and then drop all the way to 22.96 zone according to weekly. If this week's candle closes below 22.96 zone, then you should expect gold at 21.80 zone. Okay, even though when the market reaches here, there will be a rejection, 22.36. All right, there will be a rejection at that zone. But for now, my focus is here because the market can create a double bottom. Okay, it can create a double bottom for another push to the upside. So until this zone will break, we will not focus here for anything. We are not going to look at here for any reason at all. Until a weekly candle closes below this level, then it will tell us that the market is ready to drop. So if you enter for a sell, you can hold for a long time. I hope you guys are following. So this is what I see according to weekly time frame. So now there has been a breakout, and last week there was a pullback which closed bearish below the closing price of previous week's candle. All right, and this is a bullish engulfing formation right here. So there can be a push. So according to weekly time frame, we will also say that this is a demand. Okay, here is also a demand zone, and the market is testing the zone, so we shouldn't be in a hurry to do anything. Okay, that is why we trade intraday or scalping. Well, for scalping, you'll be able to buy, you'll be able to sell until the weekly time frame break a structure right here or give you a double bottom, and then you push the market high. All right, so guys, according to weekly, that is what I see. Now let's jump into daily. Let's jump into daily time frame. When you come to daily time frame, this is what is happening. Okay. No, it's kind of identical. All right. So this is daily time frame. And if you look at daily time frame very well, you can see that there was, yeah, the market actually respected this level after it firstly broke. There was a break of structure here, right? A break of structure here. The market went up, closing above, and then came here, breaking the zone again. But why? Because it couldn't really break here. The reason is this. Look at this level right here. Look here and look at here. You can see there are a lot of rejections at that same level. So when the market reached there, it had to pull back and got rejected again. Now you can see that last Friday closed bearish engulfing here, but it still respected this level, right? It still respected the 23.28 level. So based on the bearish engulfing, we can say that there can be something like this, a push for the market to drop. All right. This is based on weekday this break of structure here. Okay, because this created a support and now the support has been broken, but the market is sitting on another support. So based on this support, there can be a pullback to test this breakout, and the market can fall down, breaking this support zone and coming all the way. So if the market is falling down, this is our zone 22, 2308, 2300, and then 2296. According to daily time frame, the zone can come all the way here, or it can still sit here. All right. So these are the things I see according to daily time frame. All right. I think we can also get something. Let me look at it. Oh, this doesn't make sense. Doesn't make sense. Looks like I'm forcing this thing. I don't have to force it. Okay. So let me delete. Yeah. So guys, that is what I see. Actually, I see on daily time frame. So let's look at H4. What is happening in H4? Now, if you look at H4, you can see that the market is actually sitting on a zone. Okay, the market is actually sitting on a zone, and this is it. Yes. So this is the zone the market is currently sitting at. And if you look here, let's look into the candles. Now we had a tweezer bottom right here, testing the same zone, tweezer bottom. And then the market pushed up, came back again. It failed. This candle failed to close below the tweezer bottom. Okay, it's still closed in between, meaning the zone has still been respected. And this candle also closed a little above the tweezer bottom. So there can still be a push to the upside to at least this zone, or can even go all the way to 2342. Then it can drop, and as it is dropping, your target is still this zone and then the next zone. All right, so according to H4, this is what you should expect. You can see that the market is actually trading in a zone, like in a range. This is the range. Okay, so until the market leaves this range, it will be do buys and sells, buys and sells, buys and sells. Now we have first touch here, second touch, third touch. Okay, we have a third touch on this particular zone. Here is the third touch. So there can be a push to the upside, and then for this one to be also first touch, second touch, another third touch. Okay, so there's something like this can happen, whereby the market will go here to give a third touch right here and then drops. So when it is dropping here, this will be a fourth touch, so it can break it and then keep on falling down. This can happen. I'm not saying it is happening, but looking at the structure right here, this can happen, whereby the market can test here and sell, because recently it is respecting this level. Okay, so there can be another push, either to test this level and drop, or to go all the way up here and drop to break this structure and then keep falling down. All right, so these are the possibilities. Okay, these are the possibilities I personally see. So what you have to do is to wait, watch, and allow the market to do all it wants to do. Once you see what exactly the market wants to do, then you start looking for opportunities. Okay? Yeah. So all we need to do is to watch out and see how things are going to play. Once we get opportunity, we will go in. So let me take you to H1. Now, if you look at H1, what is happening in H1? You can see that the zone, first touch, second touch. Now, this is the third touch, right? This is the third touch. And if you look at the third touch, you can see that this is the nice bullish engulfing. Okay? A nice bullish engulfing, even though H1 has also formed a supply. This is a supply right here, a supply zone. And you can see that the market is testing the supply zone with a wick right there. So when the market opens, I will advise you wait and watch. Okay, during New York session, London session tomorrow morning, if the market wants to go here, there will be a candle that will close above the supply. So once you get a candle closing above 23.32, you can buy gold all the way to at least 23.48. Okay, you can buy to at least 23.48, 23.55. Then you can look for a sell again from that particular zone. All right, that is what I see. If not, the market will test just this level and drops. So if and else, either no, this not like this. It will have to break this one, test it, then it means you are dropping. And if it breaks it, test it, then you are buying. Okay, so these are the scenarios we have. Okay, either the market will just come all the way here, break this, come back to test, then we sell, or it will go up, break this, test it the level, then you buy. All right, so these are the two scenarios I personally have for gold today or tomorrow. All right, 30 minutes, what is happening? So if you look at 30 minutes, you can see the zone being nicely, and that look at the rejections. Even though there is a strong candle, but look at the rejections. You don't just overlook it. Okay, so you can just sit down and watch and see how the market is going to respect or break those zones before you can actually go into the market. All right, so guys, if you ask me, this is all I see in the gold market. Okay, so let me come back and read your comments. Yes, it's drop cause weekly sells. It may drop or not, as you said. But the last week's candle didn't touch the zone. Can we say it retests? It's Can we say the retest is not yet over? Let's look at it again. Let's look at it again. Weekly time frame. Now let me go and let me go and read your message, your comment again. But the last week's candle didn't touch the zone. Which of the zones, bro? Which of the zones are you talking about? Which of the zones are you talking about? Kindly let me know because I'm not seeing the zone. You said gold didn't touch. Are you okay? Okay, okay. You mean the 2370 zone? This one, the blue line. Yes, it couldn't touch it, and it still closed bearish. Okay, it couldn't touch, but it still closed bearish. So there can still be a push to touch that zone for another push to the downside. All right, that can happen as well. So that is why I said we need to wait. And looking at the monthly, looking at the daily, there can be a daily push and drop. They can also go here in the zone like I showed you, H4. It can also go back to this zone and drops. Okay, so whatever happens, just watch first and see your confirmations before you go into the market. Don't just go and trade blindly. Okay, don't just go and trade blindly. Make sure you get your confirmations before you go into it. Weekly can fall to 23 at support. Okay. Yeah, guys, any other question? Any other questions so far? Let me show you this screen. So this is something I'm going to do with the gold mastery students. Actually, I'm doing it alone, but I decided to involve them so that everybody makes money together. All right. And this is it. We are using $30 capital to trade for 30 trading days. It will be 30 trading days if we don't lose a single trade. But if we lose a trade, it's going to exceed 30 days. And if I say 30 days, I'm not talking about 1 month. Because remember, we have 20 days in a month when it comes to trading. Okay, Monday to Friday, it is 20. So, talking about 30 days trading, meaning 1 month, 2 weeks. Okay, and if we are able to follow critically like this with $30 and in 1 month, we are going to make a total of $7,102, $12. Okay, whereby we are risking 10% of your account size. Okay, so per trade, you are risking $10 to make $20. And in this scenario, we are going to risk, let's say, 20 pips to make 40 pips or whatever it is. Yes, but we are going to have a trade such that it's going to have small, tight stop loss because with this, the account is small and we are using 0.02. So even this one, you have to risk 15 pips. If you risk more than 15 pips, you are going to lose more than $3. All right. For you to achieve this is possible. Okay. It is possible to achieve, but it comes with high frequency of discipline and patience. If you are not patient enough, believe me, you can never do this. Okay. If you are not patient enough and disciplined enough, you can never achieve this. It's either you can go more than this, you can get more than this, but you will lose everything in a day. Okay? Because you are trying to flip your account, you can make more profits, but you can lose everything. You can lose everything within a day. That is why a lot of people will say, "Oh, I flipped 10,000. I flipped $100 to $10,000." But within 3 months, you see that that same person who was flipping account is still broke. Why? Because he took some crazy risk and lost everything. The screen will come because I have shared it already, so it will still appear. Okay, I'm sure you guys can see it now. Can you see the screen? Guys, can you see the screen? All right. Yeah. So if you look at it, you can see that the capital is $30. Okay. And the risk, we are taking 10% risk to make 20% reward. Hey, I'm still in a meeting. Yeah. So you are risking 10% to make 20%. Remember, this is different. This one is different. Ah, the screen has come, bro. Check it well. I'm seeing it. I've shared the screen already. Can't you guys see the screen? Yeah, it's clear. So you can see that this is the capital $30, and you are risking 10%, which is $3 to make 20%, which is $6. So after your first trade, you are going to be having $36, right? Then the next day you are starting with $36. So risking 10% of it, which is $3.60 to make $7.20. So at the end of the day, this is it, and your capital will increase to this. So third day you will start with this, and then you are going to make this the fourth day. So this is different from flipping account. Okay, in the long term you are flipping this account, but this is a long term goal, not a short term where you flip the account in a single day and then you are happy. Oh, I'm a flipper, I can flip account, blah blah blah. Then within 1 month you see the person broke because he took some crazy risk in order to flip that account. But this one comes with high frequency of patience. Like I said, high frequency of patience and discipline. How can I zoom it out, bro? I don't know how to. If you have an idea of how to zoom it, just let me know. Okay? Yeah. So if you are not disciplined enough, believe me, you cannot do this. Okay? Can you imagine? You have gotten a setup which can give you like 200 pips, but you are only taking 40 pips. You are risking 20 pips to make 200 pips, but you decide to close the trade at 40 pips and close for the day. Only few people can do this. Okay? Only few people can do this. But believe me, if you're able to do it that way, in the long run, you are going to hit your target nicely. If you don't do it, oh, Charlie, I have gotten a nice A plus setup, so let me stack. Then boom, boom, boom. Instead of you to risk 1%, you went ahead to risk 50%, and it gave you sweet money. You are happy, right? The next day, you will see similar setup. Oh, Charlie, I've seen an A plus, so let me take a risk. You risk 50% and you lose all the 50%. Okay, so at the end of the day, you realize that the goal for you to trade within 30 days to make this amount, the 30 days will elapse and you realize you are not having up to even here, up to even 300. Why? Because you are going back and forth. So this 30 days challenge, this is how it's going to be. Let's say on the first day, we made our profit, we made $6. On the second day, we hit stop loss. So our equity has reduced from $36 to $33. All right. Once we lose one trade, we are done for the day. Or we can choose to risk 20% a day, 10% per trade, but 20% in a day. So if the whole day we lose 20%, we are done for the day. So tomorrow you started with $30 and you made $6. The next day, all the two trades you entered hit your stop loss. So you have lost your $30, right? sorry, you have lost the profit you made on the first day. Now you are still at break even. The next day, that will be on your third day. You come back again, you made your 20%. You are not going to trade again because you were in loss. No, you close for the day, come back the next day and continue. So once you hit your 20% a day, you are done for the day. And remember, if you are taking 20%, you are risking 10% per trade. Okay? So this requires high level of discipline and patience. If not, it's not going to work. Okay? It is very easy. For some people, they might say, oh, this is very easy. Charlie, making just $6 in a day, it's very easy. At the end of the day, you go and see that he will open 0.05 or even 0.1, thinking he will close the trade within 1 pip or some few pips. At the end of the day, the trade will go against him and he will lose massively. All right. So this requires high level of discipline. That's why I am willing to do it with those people, because for me, the patience, I can even sit the whole day without placing a single trade. Okay. I can sit the whole day, watch the markets without placing a single trade. So if you are going to follow what I will tell you, believe me, we are all going to reach the destination and make this money together. Okay? And if we achieve this one, the next one will be $100 challenge, whereby we are making $20 a day, and that will give us nothing like 20 to 30,000 in 30 days. So we are trying this. Okay? We will try the first one. Once it works out, then the next challenge will be $100. Okay? And then the next challenge will be $100. And if we succeed in that, then we'll be going to $1,000, $10,000, and before you know, you're already a millionaire. But remember, it is easy to say it, but very difficult to do. Okay? So guys, that is it for the 30 days challenge with a capital of $30. If you want to be part, you are supposed to be part of the gold mastery students. Then you get your capital ready. We are starting tomorrow. All right. So if there is no other question, then here ends the analysis for today. But if you have a question too, you can ask. Okay? If you have a question, you can ask. So guys, any question? 20 to 30%. I didn't say 30%. I said 10. You are risking 10% to make 20%. You are not going to risk more than 10%. Okay? Because this is what you are going to do. At the end of the day, you will send me a screenshot. You will post your screenshot, your equity, your trade, everything in the community or in the mastery group. If I see that you are doing something different, I'll kick you out. Okay, I'll kick you out. So make sure you follow exactly how we are going to go about it, and everybody is going to be fine. So guys, if there is no other question, then here comes to the end of today's session. Thank you all for joining, and have a nice day. So in the next 1 minute, if nobody says anything or asks any question, then we have ended today's section. You're welcome, bro. Okay, so guys, thank you and have a nice day.